Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Hello and welcome. Now before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, euro dollar. An indecisive doji cross on Friday after the previous session's combined key reversal up and bullish engulfing pattern. Interestingly, it was a second consecutive close over the bright red upper trend line of the early July to date descending expanding wedge pattern, which is currently 108.42 to 117.03. This is not a great version of such a pattern, though the upper trend line has been significant resistance. However, I'm not as yet ready to start naming potential targets topside, not just yet. Overhead we have the twin downtrends of July 2008 to date downtrend and the May 2011 to date downtrend at 117.77 and 117.82 respectively. However, I don't rate these too highly and would rather look at the dark blue neckline a little further above, currently at 118.09, as a better source of resistance. This is the familiar resistance of the dark blue neckline for the significant combined June to July head and shoulders top, which also was a double top formed from the head and the second shoulder. Looking below, we have the October 21 high at 116.92 and then the green short medium moving average, currently 116.66. We're further down the November 2020 low at 116.02. And with the 2019 high just below that at 115.70. Now looking further above, we have July's high at 117.88 and June's high at 118.29. Okay, so recently I believed the large combined head and shoulders top and double top pattern to be the more dominant pattern here, and I previously laid out targets for these patterns below. The primary target on these had been achieved, but the secondary targets for both became not only harder but also out of reach, so I've retired them. Finally, as I've said now repeatedly for months and months, we are set up with nearly 9 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday, the 31st of December 2025, either over 110.36 or under 103.53, then we'd be on. Anything in between and we would have a lesser outside year pattern. Now I'm at this stage not even going to contemplate what the results at the end of the year will be, just that we are set up to achieve one, though right now it looks very much like an annual key reversal, up. Now, so far today, well, mainly within last Friday's action, though we seem to be right now trying the top side, but ever so gently. Cable, aka sterling against the US dollar. A possible hanging man pattern on Friday after the previous session's key reversal up. Okay, so the market has mainly been moving sideways since early August, caught on the top side within a congestion band between the September 2020 high at 134.83 up to 135.81, which has just below it the green short medium moving average, currently at 134.75, and the mauve medium moving average, currently at 134.69. Now this sideways action caused the market to exit on the top side of the recent bright red early July to early August descending expanding wedge pattern, but the market has been in no hurry to achieve the topside targets. We still have a primary target X above in the 136.78 area and a secondary harder to reach target X2 up in the 137.88 area. Both these now have a question mark hovering over them with the lack of a push higher. Finally, much like euro dollar, we are set up here for this market to make that rarest of patterns a possible annual key reversal. Thus, if we close on Wednesday, the 31st of December 2025, either over 127.29 or under 125.11, then we'd be on. Anything in between and we would have a lesser outside year pattern. Now, I'm at this stage not even going to contemplate what the results at the end of the year will be, just that we are set up now to achieve one, though it does look like we are moving towards an annual key reversal up. So far today, we're initially within Friday's action, but now a significant attempt higher up to and through August's high and now to levels last seen in early July, and also out of the current congestion band between 134.83 to 135.81. So we're in a little bit of a free area now, and up towards the next congestion band, which is the smaller 136.21 to 136.43, and also towards target X at 136.78. US dollar against the Japanese yen. An immediate countering bullish engulfing pattern on Friday after the previous session's key reversal down. The market continues to be capped by the Fibonacci congestion at 148.68, possibly stretching now down to the Fibonacci congestion at 148.11. The congestion at 148.68 is right now reinforced by the very slowly declining gold long moving average, currently 148.71, with higher up the 50% Fibonacci line of the July 23 to July 24 move at 149.61. And looking below, we have Fibonacci support, and it has recently been quite good Fibonacci support at a 61.8% Fibonacci line of the July 23 to July 24 move at 146.69. And we also have some dubious support from the rising green short medium moving average, currently at 147.43. Below that, we have the mauve medium moving average, currently 146.14. Overall, we are still in between the dark blue middle time below, currently at 144.28, and the dark blue upper time above, currently at 154.89, of the important, large, shallow, and longer term early July 24 to mid-January 25 bearish shift pitchfork. This is one of two major patterns in operation here. The other one is the broken bright red mid-January to mid-June descending expanding wedge pattern. This had a break higher in mid-June, though it was more like a stroll higher. Primary target up at 150.5 was reached 8 weeks ago, though we still have live a secondary much harder target X1 up at 158.85, which I'll retire after this commentary, as I believe the market really, if the market really meant to get back up there, it would have done so by now. Now, so far today, a higher open and then a reactionary move back down from the open, though still within last Friday's range. US dollar against the CNH, the offshore Chinese yuan. An immediate countering key reversal up and bullish engulfing pattern on Friday, after the previous session's bearish closing black Mariposa, which incidentally been the lowest close since November 2024. However, on Friday, prices were capped by the dark blue neckline extension to the January to April 2022 reverse head and shoulders bottom, currently 713.09, with a little above it the bright red lower trendline extension, currently 714, for the mid-January to late April 2025 descending triangle, which might be more substantial. Plus, a little higher still, we have the Fibonacci congestion at 714.95 and 1748 that can be regarded as one single congestion zone. Looking below, well, we have some free air all the way down to the congestion between 706.32 to 706.57, and that's made up from the 50% Fibonacci line of the October 22 to April 25 move and the June 23 low respectively. However, the market seems shy of testing that far down just yet. Finally, a strategic observation once again, and I'll continue to be making it here. Please note how the long moving average, currently at 723.43, has been, despite some up and down waves, relatively flatlining for quite a while, so that if prices do stray too far away from it, then they seem to be brought back in towards it, and that applies in either direction. So far today, a higher open, but capped again by the dark blue neckline, and prices have pulled back to just below unchanged from Friday's close. US dollar against the Brazilian real. A third bearish black crow and a significant second consecutive close under the purple May 24 today uptrend, which is currently at 539.96, which unless things change, I will shortly realign. Plus, it was the lowest close since early June 2024. It was a concerted attempt at a break low, though it has run into a lot of support down there, but nevertheless closed under both the August and July 2024 lows at 537.59 and 536.76 respectively. Support is now down at a pair of 38.2% Fibonacci lines for the October 2019 to December 24 move at 532.15 and the October 2018 to December 24 move at 527. All this action once again shows the resilience of one of the showrunners for this market since April, and that's the overhead bright red upper time, currently at 540.94 of the mid-December 24 to mid-April 25 bearish Andrews pitchfork. Beyond this, we have a recent July-based congestion band between roughly 552.21 to 561.09, with just below it the slowly declining mauve medium moving average, currently 553.39, and the green short medium moving average, currently 547.51. US dollar against the Mexican peso. An inverted hammer pattern last Friday. Now, there's an issue about this. Traditionally, this is seen as a bullish reversal, but it's a controversial pattern, and I know many technical analysts see it as a bearish continuation pattern, which may tie in with Friday also being a 6th bearish black crow and 2nd consecutive move down below the recent rectangle pattern. And that's been formed from the cap on the market, the congestion between the 50% Fibonacci line of the April 24 to February 25 move at 1876.94 and the 1885.40 area, and below by the significant pairing of the February 2020 low at 1851.71, along with the 61.8% Fibonacci line, the big old April 21 to April 24 move at 1850.81. It's a narrow congestion, that one, but one that had held up the market until last week. Well, held it up since early July. I will now be considering possible targets below for this break below the rectangle pattern, but I'd rather wait a session, maybe even more than that, just in case this is a false break lower. Now, so far today, nothing much. A higher open, but still within Friday's true range. And then a small move lower, still within Friday's true range.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.